Ladies and gentlemen, Gay Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.8% there on the S&P. Looks like NASDAQ and semiconductor and Dow all up today about 0.8% or so. Small caps lagged a little bit, but still positive 0.4%. Transport, banks, and energy did outperform the three large indices such as S&P, NASDAQ, semiconductor. We did see biotech thriving today, more than 2% positive. Healthcare, home builders up more than 1.5% or so. Utilities up a little bit. Retail 1%. Emerging market 0.5% there. Bitcoin is down about 5% today. Gold, silver, miners flat, up a little bit. Miners did catch a bit. Looks like close to 1% positive there. Dollar pretty much flat. Oil down a little bit, about 0.6%. Treasury bond flat. VIX is down today. Let's stick with S&P. Spider 65-minute chart here. So there are a couple things we talked about on the last night's analysis. I think last night's analysis, there's a few things that was really important. One thing that I talked about and emphasized on yesterday's analysis was that the gap, this down gap getting filled, right? So I think things could have been worse. You see this downturn here? That downturn could have been worse if this down gap was never filled. I think there was chance if that down gap was never filled. I think bears probably going to at least fill this gap at 435, potentially even bring it down to the midterm moving average below. But that we did see that gap getting filled with the gap up on yesterday's morning at open. And then we started coming down after this gap has been filled. I think what happened was a lot of people started chasing after on this gap up. And a lot of times what they would do is they place their stop just underneath it. And the action that we saw last night on the last hour and this morning here, I'm going to zoom out a little bit. So a lot of people would have been placed there, support something like this, right? Because they're always too intimate with the short-term movement of this market. So they would have put their stop. So they would have YOLO'd here or, chased it up. And then they would have placed their stop just underneath this potentially a support level like this. And what happened on the last hour, on the last hour trading, that event, the last hour kind of a plunge there is to get you out. Get the people who chase this up, placing their tight stop. And then if they're adamant about holding onto it, if today's move, because we actually initially gapped up, right? This is where it closed yesterday, last hour of trading. And then this is where it opened up. So you can see that we actually gapped up this morning and then saw a plunge. So if anybody was thinking that, they're going to hold on to this, I think this, I'm going to be more adamant about, again, if you're placing these tight stops, you know what I'm saying? And then when this thing started tanking, coming down, essentially losing 437 for a brief moment, I think this was the last draw for these short-term traders to get stopped out, and that inevitably becomes the proverbial bottom, and then we rally back up, potentially people chasing back up here after getting stopped out. So you can see when you're too intimate with the short-term fluctuations, pretty much this has been the story this entire year. You're constantly letting this market bully you around, turn you around. You're constantly getting stopped out because the market is brilliant. Market is brilliant. Market is insidiously clever to know how to touch your button, push your button, and then get you out and then move to the other direction. This is why I talked about on the last night's update, right? That gap getting filled, despite the fact that we did see that decline. I have to say that is a good, constructive move by the bulls. Make sure this gap gets filled. There's no more selling pressure. All we need was kind of a strong support level, which we talked about on the last night's update that, look and see, that's the gap area and that secondary short-term moving average. Keep in mind, last time we did find strong support there, right here, right? You can see that right there. We saw the initial plunge. We see that initial plunge, and you can see that we found support in that vicinity. And also on the last night's update, we talked about how I want to give benefit of the doubt to the buyers, despite the fact that we did see that downturn on yesterday's move, because I saw my secondary moving average, the short-term moving average, still rising, and this up gap was not filled. So do you see? If you understand the longer term picture of this market, you're not going to let this market bully around, take your stop, and then goes up without you, right? That's an up gap. It's still open, meaning bulls are protecting that gap, where bulls are making sure to kill that downside gap by doing this. And once that gap gets filled, it's going to act as resistance. It came down much lower than a lot of people anticipated, but I think market realized a lot of people chased this move here on the yesterday's morning's open, and people are placing tight stops here. Make sure to get their stops out. Make sure they're at a loss before making it back up. So this is not something new. This isn't something, oh man, this market is crazy as hell. Okay, there's nothing crazy about this. This has been happening, I mean, more intensely this year in the short-term fluctuation of things. But as far as I know, the market is great at, you know what I'm saying, taking your stop, moving again without you. I'm noticing this happening quite a bit since 2012. So this is nothing new. This year, it's just been very, very like short, choppy, lethargic market, and then it's been happening within that short, choppy, lethargic market. So things are getting, just been really, really difficult for short-term traders. We haven't seen like this smooth rally this entire. Keep in mind, we haven't seen a real correction this entire year. Now we're getting into August. We only got 4 more months to go this year. We haven't seen a real correction this entire year. So, well, what happens now? Well, first of all, that secondary short-term moving average held, this gap held. We reclaimed the first, a short-term moving average. We cleared this resistance here, and also I'm going to move this up here because that was a prior swing high. If I go to line chart, you can see a definitive prior swing high here. You can see that this is high, lower lows, right? And you can see how deceptive it was to kill that, to cultivate the lower low, to scare everybody out, and then V-shaping higher, right? This is why it's not enough to understand these micro-term fluctuations. You must understand the mid-term and the long-term and the primary term. You must understand the overall flow of things, because in the short-term, micro-term, there will always be shenanigans, right? The more you focus on the short-term, the more miserable you're going to be. So right now, 440, right? 440 is the support, right? That's a prior resistance, potential new supports. Here there be any kind of quick drawdown or something like that, I expect 440 or so should act as support. My short-term moving average currently residing at 438.40, so I kind of want to see this thing start to rise like this, and then at some point this price to kind of come down, retested it, and then cultivate the high low. It doesn't have to. Market can keep going higher and do that later, but at some point it's going to. Like you can see right here, up, and then retest it and then gets back up. So we may see something like this. So I want to continue to give benefit of the doubt to the buyers. So check out that oscillator and see if we can extract any more information. So this is kind of what we talked about yesterday. If we want to see the buyers, bring this up, we will need to see a bullish rally and hold up for the first 2 hours, right? So you can see on the first hour, we did see that decline, but, thankfully that gap area, the secondary short-term moving average was there, dip buying activities occur. So on the second and the third hour, which is 2 hours of bullish rally, and then held up the entire day. With that, the oscillator seeing that kind of a full-on cross there, and bears failed to bring it down to the bottom of its band, right? You can see we're seeing these premature crosses. This essentially, showing us that bears are weak. Bears are not able to push it all the way. So I want to continue to give benefit of the doubt. There's a good chance it's going to kind of go back up here. We might see another bullish follow-through day as long as there's no shenanigan, right? And this thing kind of getting back up at least to this level right here before we seeing any kind of overbought sentiment. So let's see how the market plays out tomorrow. I'll come back for you. Enjoy your evening and good luck trading tomorrow.